You've been at the conference, you've been speaking with a lot of foreign investors who are here. What's the sense you get about India? Yeah, it's expensive, but it's been expensive. You could have made the same argument 3 months, 6 months, a year ago.
The people who are, obviously the people here are already invested.
Right.
And so their issue, they're not too hung up on the valuation. I mean, they're all concerned about the valuation.
No, we're talking about incremental flows into the Indian market. I mean, what's the sense you get on that? I mean,
well, my sense is yes. The problem for the foreign fund managers as a whole is that they are underweight. Based on our latest data, based on the top 30 global emerging market equity funds, they're now marginally underweight, which is not where they want to be, because most of them would agree with me that this is the best long-term story. But they're underweight. They've become underweight from a de facto standpoint. One, because they've been reluctant to pour money in because of the high valuations. Two, because this is a very important point, the neutral benchmark weighting of India has just gone up a lot, which has made them become underweight by market performance. But there's an additional issue. There are two sectors where the two sectors where foreigners have traditionally most invested in India have ironically been underperforming, i.e. IT services and banks. So in the last year, many foreign investors, particularly value-orientated investors, would have gone into the banks for the first time because they came within their valuation range. But you know, they're not the hot areas of the market. The hot areas of the market in India have been areas like industrials, infrastructure, real estate, energy, defense. These are the areas which have been driving the market. That's not the area traditional emerging market investors have been investing in.
So you don't think that foreign investors are going to come back to India in a big way?
Not in the immediate term, but the good news about this is the really positive point to take away is any major correction in India, like say 10%, in my view, will be viewed by foreigners as the opportunity they've been waiting for to add.
Are you still expecting a 10% correction?
No, I'm not. I'm just saying that's...
someone said 5 is the new 10 and maybe 2 is the new 5.
No, in my view, I've got a greed and fair long in the India portfolio. I'm not going that defensive in it.
Okay.
So, because the point is I can afford a correction. I've got very good performance. But my portfolio is heavily in energy, real estate, capex plays, but I have got the bank, so that's, I suppose, the conservative part of my portfolio.
Okay.
But the real issue for foreigners, I think the more foreigners know about India, the more specialized they are in the market, the more relaxed they are on the valuations. It's just the generalists are the more concerned. And global investors, as opposed to global emerging market investors, barely own Indian equities at all. So I'm talking about global funds.
Right. Not EM funds, but global funds.
They barely own India at all.
At all?
Yeah, literally. They don't own India.
So it's a strange kind of a position, right? I mean, because you're saying is the best long-term story.
So many global investors will agree that India is now the best story, but there's a practical issue that if you only invest in India via ADRs, you have extremely limited choices. Because of the lack of ADRs quoted offshore. Unlike in China, there are many ADRs. And the second practical issue is you want to invest in India in a sort of more real manner, you have to get FII approval. And that is a regulatory obstacle, right? That requires a real commitment. So most global funds have not got FII status.
Is that such a big issue? I mean,
yes, that's an issue. Don't underestimate that.
Yeah.
So a big fund management company could have their global emerging market fund with FII status, but their global fund may not have it. And then this capex increase, or capital gains tax, will now become another, will now put them off.
You know, in your note, I think the last but one note, you did mention that you put in that capital gains, and you said, well, that worries you.
Now, that personally, I don't believe in capital gains taxes on equities because people have already earned the money and they're risking. They should be encouraged to invest in equities. Now, obviously, you can deduct the money you lose, but that's just a philosophical point. So, obviously, the government's raising.
No, but did you mean that in the context of where India is in terms of the political?
Well, no, that is an issue because in most Asian markets, you do not pay capital gains tax. But be you domestic or foreigners. But there's another technical issue where where if you're running a dedicated Indian fund, or you have to make a provision for that capital gains tax, apparently, even if you haven't sold the stock. If you see what I mean? So if you're a fund manager, you're kind of starting behind the benchmark.
Because of this?
Yes.
Okay.
So that is actually a negative, yeah. That's a negative for people trying to do dedicated Indian funds offshore.
So do you think this, I mean, India's weight has gone up, right, in the benchmarks, but do you think foreign funds will stay underweight for some time? I mean, that underweight position can actually even widen if local investors continue to put in money and the market continues to do well.
The direction of travel is foreign ownership is declining relative to domestic ownership. Fundamentally, this domestic flows are just extremely positive. And we estimate Indian households have 6% of their assets in equities. Though none of us are expecting the recent pace of flows to, by every law of logic, they should slow down. As you say, it's remarkable they've picked up since the election.
I mean, it's $4 billion a month now on a regular basis.
But from a macro standpoint, at this conference last year, we were arguing that we were in the early days of a capex cycle, but you couldn't really show data comprehensively proving that. Actually, the best evidence we were in the early days of a capex cycle a year ago, 15 months ago, was that capex stocks were rallying.
Sure.
But there wasn't the actual data. But now there's real data highlighting that the private sector capex cycle's underway.
But do you think, in a lot of ways, across sectors, I mean, stocks are already pricing a lot of this in India? I mean, capex stocks, for example.
So tactically, you would be a bit more cautious.
You would be.
Yeah. But I'm not. I've got these long-only portfolios, and I believe this. See, the last time India had a capex cycle, which I would say was like from 2002 to 2009, India massively outperformed the rest of Asia in that period. I remember it clearly. So if this capex cycle is happening, structurally, I want to remain invested in the stories.
Even if they go through periods of underperformance, but eventually it'll... I mean, it's a great story.
Plus, we have the residential property story, which
you've been very bullish on.
Yeah, and we don't think there's
You did highlight that last quarter there was a bit of a slowdown, but
but that I would view all that as a pause to refresh.
Okay.
So we've gotten good news of if there's a weakness to the residential property story, which has been dramatic here, right? And if there's a weakness, is very much focused on what they call the high end. Which I suppose in the US, well, it depends what city you're in.
The premium end has done very well. Yeah. You're saying that perhaps sees some...
Well, what I'm saying, if you're going to criticize it, you will say it's very vulnerable because it's just the high end going up.
Okay.
But I would say, in response, well, I would have to admit that's true. I would say that's normally how property cycles work. They start with the high end and they gradually trickle down. And in that sense, rate cuts would help because if you go under 200, to use dollars, not if you go under $2,000 for a unit, you're probably going to get to levels of more rate-sensitive buyers. And so if rates go down 200 basis points here or 150 basis points, that's going to increase the number of people who can afford it.
Right. So for
I've heard that I think I heard this week that inventory in the top 7 cities is at a 14-year low.
Yeah.
So if that's true, we can definitely keep going for another 4 years.
In terms of the cycle, in terms of real estate build-up?
Yes, because we've just entered our 4th year of an upturn.
Okay. So you're saying another 4 years?
Obviously, we take it a year as it comes, but given the fact that we had a 7-year downturn, given this multi-year inventory low, given the fact that India builds far fewer residential units today than even China, given its current problems builds, there's no reason to think why this suddenly blows up.
So tell us the sectors or places that you're most bullish on now, Chris. If somebody is trying to put fresh money to work here, what would you say?
Put it in today. So I'm not taking out, I've got 19% in real estate stocks in my India portfolio.
Okay.
Now,
what else have you
If I was starting the portfolio today, I might be a bit nervous putting 19%. But given the fact I have 90% that have done well already, I'm not going to actually reduce them.
Okay.
But if I want to have a more cash let's say I can't own cash, but I wanted to be more tactically cautious because I've got more short-term tactical considerations, and you want to own the stocks which are more neo-cash proxies, which I would say are like the banks or the consumer staples.
So, I mean, perhaps there's a little bit of underperformance. I'm not sure. Banks have valuation comfort. Consumer staples, maybe not so much.
No, but they're still, because we've got. I think we have evidence now that the rural economy is finally picking up, right? So I can see a case for adding to those tactically.
But if you were looking at slightly beyond the very near term?
Looking beyond the near term, I'm sticking with my current portfolio.
Okay.
So the issue
which is 19% real estate, what else?
No, it's big in capex plays and energy.
Okay.
And if any real correction in those areas, I'd be looking to add.
Okay.
Because I'm quite heavy in the banks, but the whole infrastructure story here in India, the energy story, these seem to be at the centre of the action, at the centre of the capex cycle.
Sure.
It's just very positive for an economy if you have both a residential property upturn and a private sector capex cycle going on. So the way I look at it conceptually is that the government in the last 10 years has spent a huge amount at the central government level building capex, which has been the big driver of the fiscal deficit as opposed to transfer payments.
Sure.
So that's been the enabling factor for the economy, which should give the private sector confidence to invest. And we are now, in the last year, seeing that actually happening.
Absolutely.
Yes. So whereas a year ago, talking to people in the government, they were saying why isn't the private sector investing? So I was saying, don't worry, the private sector capex stocks are going up.
Yeah.
But obviously, if you're a government official, the stocks going up is not. You don't trust the evidence.
Absolutely. Chris, just one last point. You were cautious, right? You're telling me you're a bit cautious. We've got another round of elections, state elections coming up. Are they going to be important? Have you heard that as feedback from investors? They're watching it closely.
On the big stage, obviously we're seeing handouts, right?
Right. Across states, I mean.
Yes. So that's obviously. I mean, that's another reason to maybe add to consumer staples. Tactically, long term, that's not so great, but that just means maybe the incumbent has a chance of winning where everybody thought they were going to lose.
But would it make a difference? I mean, even if the ruling party were not so much...
that will create some negative noise.
Because, I mean, some argue that the general elections barely caused a bump, so why should this matter?
Well, I kind of agree with that.
You do?
My message, what I picked up talking to government-related people this week is rather than passing lots of laws, the bigger focus seems to be on doing away with a lot of these regulations, which are a legacy of the what they call the license Raj. I think there's clearly a case for a bonfire of regulations to promote business.
That sounds like Elon Musk in America.
Yes.
Who wants to do the same?
That's exactly right.
Absolutely. Chris, it's wonderful to speak with you. Thank you for sitting down with us. Appreciate your time here on CNBC-TV18. It's a pleasure.
Thank you.
Thank you.